The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. I posted the charts for the FTSE showing a bearish Gartley, and I've also posted a chart of the German DAX showing a bearish Gartley. But what I wanted to show you is the headlines in the the Money Week paper here. If you just give me 1 second here, we'll get this up and take a look at it. You're seeing here they're looking on the headlines. It's Money Week, the FTSE at 10,000. Folks, it's at 6,000. That's one thing I'm absolutely sure of. I did post the DAX, shut the front door. Let me do it again. You know what? I might not have. I've got a lot of things going on today. We've got John Person coming on at the break, but I wanted to cover a few things. This market has been going up for a very long time, folks, since March the 5th of 2009. We've had a few big corrections, of course, the COVID one and a few others along the way, but nothing of any, major significance. It's always come back. The one thing we know for sure is markets that go straight up like this, they keep going straight up forever. That's a given. We know that from just looking at history. So when Mr. Winsky was on on Friday, he was quite excited about a few things. And so just for kicks and giggles, I pulled up a couple of things from the old archives that I wanted to bring to your attention. And if you'll remember, and I happen to remember because I happen to save this chart, this is the chart of the cash S&P. And if you'll go back and look at where we were in October of 2007, we were looking at a new moon. Now, what we have going on today with this full moon, this is known as a pink moon. It's a very rare event. I believe it happens once every 70 years. It's where the moon is perigee. In other words, it's as close to the Earth as it gets. When it gets to apogee, that's when you usually have earthquakes pop up. And also we have Mercury is also at perihelion. It's as close as it can get. So that means they're pretty much in conjunction. Usually that means something, pretty important. Now, that August 15th date was another super full moon, and a super moon is what they call them. And what happens is they usually work from anywhere to 2 to 3 weeks unless there's something else involved with it. Now, this particular one, this was a market that had been going up. Believe me, we're only at 1590 in the S&P, and of course we had the break into 2009 where we went all the way down to 600 and something, folks, I believe, as I recall. No, it was 6,400 in the Dow. So that's it. But this is what I did is I just pulled out a whole bunch of these. I'm only going to show you 3 because that's all the time I have, and I think you should do. Yes, a super full moon is a moon that has perigee. In other words, it's at as close to the moon is as close to the Earth as it can possibly be, and this one happens to be on the equator, and it's also a perihelion with Mercury, which is an 88-day cycle. That's all these things are as cycles, folks. But here's the one that's interesting. Over the past year or two, look at 2018 in January, we had a super full moon. Look at the bottom, we had a super full moon, and you can see where we are. We had that big move, all the way up at that area here, and we'll see here what happened next. I'm going to just bring it forward to show you whether it's going to happen this time or not. I have no clue. All I know is look what happened when we had the super full moon right before the COVID. I mean, the market had a big break, and then there were two others in there, as you can see, and they happen in clusters. They happen either the first 3 months of the year or the last 3 months of the year, and that's what we're looking at now. We're looking at one of those super full moons. Whether that means anything or not, I don't know. All I'm telling you is that we're looking at something that's going to be very, very exciting, and all we're going to have to do is to try to find a place if it's going to be right. These markets don't go up forever, boys and girls. Be realistic. Hey, when my sister calls me and asks me if she should buy Bitcoin, Okay. I mean, she's 75 years old. The only investment she's ever made with me has been soybeans, and that was 20 years ago. So we did okay. But I mean, she just, that's just not what she does. She's a retired nurse, and so she doesn't do that kind of stuff. So that's the main thing. Now, we've got some information from our good friends at Cycles Research, also talking about the stock market. But first, before we get to that, I wanted to show what the Cycles Research is showing on the gold. They're showing that there's now a negative bias coming in here in gold, at least until the end of April. And here, as you can see here, we're looking for a situation here where gold should be topping here around the middle of next month, right around the 15th. So let's keep our eyes open on that, and we're going to see if that's it. We're trying to buy gold. We haven't bought it as of yet. And by the way, those of you that did the euro trade, make sure your stop goes to break even. It has had a $400 profit in it at one time. We're pretty close to that now, but don't let it go to a loss after being ahead. That's the main thing. Now, I've had a couple questions about a few other things, and before I do that, I wanted to share something that we got from our friends at Cycle Research, and shows you the statistics on the S&P. If you'll notice here, the biggest days of the month happen on Tuesday, Wednesday, and Thursday. The worst day of the week is Friday. So I don't use that type of information. I use one day at a time, and to see what's going on. Yeah, it was amazing with Norman. And it's the first time I've heard Norman get excited about something in a long time, and believe me, that really means something. So we'll see if this thing means anything or not. But this is how I got started in the Astro part of it, real heavily with Dr. Miller, and it's served me well. But you got to wait for to see if the things are working, and that's when you want to do it. If it turns down, all I know is, folks, this market that we have going on right now, it is going to end badly. There's no. You just go back and look at history, and I've looked at everything, folks. I'm talking going back into as soon as we had, relatively good data, and then I look at history from the South Sea Island bubble, the Florida land boom, and the tulip bulbs. I've looked at all those things, and they always end badly. Now, let's take a quick look here at Bitcoin here. Let's get this up here so we can look at it here. Now, Bitcoin, you'll notice here, we had that high up there at the 3 drive to a top pattern at 65,000. Then this is a hourly chart, folks. Then you see the 3 lower highs right there. And then look what happened a few days later. 3 lower highs. That's what you want to look for. You don't have to pick a top. Wait till you see that. What's hard about that? You could put some moving averages, you could put some oscillators, you can put everything you want on it. But frankly, it isn't going to make any difference. That market's, it's in a short-term downtrend. They broadcast today that there was a possibility that Bitcoin could have its 4th straight down move in a year. Are you kidding me? We only had one in a year. But, we've had a big correction. We went from 65 all the way down to 48. And if you remember, the 382 on this puppy comes in at around 46. So this is interesting. We're going to take a little break here and stay tuned. I got something that I think you're going to be interested in. At least I hope you will. We'll be right back.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart showing the Fed. I don't know if this is correct or not. I sent it on to Shane Smolian to double check it for me, but it's showing that they're not quite as active as they were in the market. I don't know because I just look at the charts and it gives me a rough idea of what we're looking at. I have one other chart that I'd like to forward on to you from our good friends at Cycle Research. If you look here, you'll see here that the cycles in 2021 tell you that the market should be topping somewhere in late April. And if you notice here that the market, the best time to buy is from January, or actually November, through end of April, and then the worst time to own it is from May through November. And this is why Cycles Research is beginning to turn negative in the stock market and have liquidated their long positions and are now getting ready to enter the short side, as I was told. Now, I wanted to share with you a little bit about the newsletter, folks. The newsletter is written by one of my dear friends and former student from many years ago, John Jameson. I met him when he was living in Perth, Australia, 20 years ago. He's been here to visit me several times, and he's been a big fan of mine for a long time, and I'm a super big fan of his. He's a very, very incredible writer, and he asked me if he could write the newsletter as a trial basis a year ago, and he's been writing them ever since, and that's why they're so entertaining. And he weaves them around a story usually related, well, it's always related to the market. This one happens to be related to probabilities and risk control. And the story is relating to the movie The Imitation Game, which was a story of Alan Turing, how he was able to break the German code that allowed us to find out what the Germans were doing in 1943, which led to the end of the war very, very quickly. And this thing had something like 23 quadrillion was the chance of us breaking that code. And Turing, what he did was he had a little crossword puzzles that they had posted, and anybody that could solve those cross puzzles within a certain period of time, that he hired like 5 people. And the crossword puzzles have hidden acronyms and stuff in there that help you find out, what the real key of the thing is, and that's what this code was all about. Well, as John and I were talking about this, he was telling me that the code in the movie was Heil Hitler. Whenever it said Heil Hitler, that was a valid one, because sometimes they would put out things that were not valid, but whenever it said Heil Hitler in there, that was the code to tell you that was a valid thing. So that was one of the things that put on a green light. And I said, well, that's pretty good, John. And he said, Larry, I can't put Heil Hitler into the newsletter. He said, we'll be banned. And I says, what do you mean? He says, trust me. He said, Hitler is he said, that's a word that, like, if you use the N word, he said, you're banned. They don't even ask any questions, just anything like that. Even the T word, UMP. I don't know. But he said, we just can't use that. And I said, well, that doesn't make any sense. But anyway, during that time, Norm Winsky was kind enough to send me, and I'm not going to post this into the room because it was so darn funny. When WD-40 came out in 1964, they had an ad that was posted in the newspapers. Now that ad, you're going to have to go in and look for it yourself, because I'm not going to post it in the room, even though I have permission to from our good friends Tommy and Tommy Jr. They said they thought it was pretty funny and able to look at it. But all you want to do now is think about what they said in that ad compared to what you can say now. There's not one thing in that ad that you'd be able to say now. It's truly amazing. And WD-40 is a product that almost everybody uses. But the things have changed now from what we can say and what we can't say. And that's what the bottom line is. And so we've got to be careful. And you have to be careful, because what's going on, you got a lot of people on the other side of the fence, whichever side of the fence you happen to be on, that you have to be able to understand. And it's the same through in the financial markets, folks. You've got big companies that are controlling, a lot of the information that we get. Apple, Microsoft, Facebook, Google, all those companies can do a lot of things that could, give you either misinformation or bad information. So you're the one that has to decide on whether you're going to use it or not. So that's the main thing, to remind ourselves that things have changed in the last 50-some years. I certainly remember that. That's a big deal from what we're seeing here. So let's move on now to, I wanted to okay, Cindy, you're going to be banned forever. Unfortunately, she sent a private message to me, but it was quite funny. But we have to be really careful of what we say. I've been doing this show here for, let me see, this would be my 14th year, and I think I've been fortunate enough to not say any off-color words. Once in a while, I'll say the D word, but that's about it. I've been really careful not to say anything. But those of you that hang around me very much know that that's not how I usually spend my days talking. So we'll remind ourselves of that. In fact, I was telling Byron Tucker about this particular thing with the Alan Turing. He was laughing, and he said he remembers a time that we were at Conti. And a report came out, and I was on the wrong side of the report, and I had some quarters in my pocket, and for the parking, because you couldn't park in the building, it was already filled. I had to park on the street, and I got mad, and I threw the quarters on the floor. It was a carpeted floor, and I threw them so hard that they bounced off the wall, and one of them hit the window and cracked the window. It cost me $800 to get that darn window fixed up on the 20th floor. Anyway, that's neither here nor there. So we're going to be talking about a few things here about this U.S. dollar here, folks. We've had a really interesting pattern here. It may or may not work. It started to work, and that, of course, has been the euro. The dollar index has held that magical level. It went below it last night for just a little bit of time earlier in the evening, and then has since come back and popped above it. But folks, the U.S. dollar could easily, and I mean easily, melt down from here, and that is going to be a really big deal if we get something like that happening. You'll notice here the number we were looking at, hold on, we'll get this up here so let you folks see it, but the number we're looking at here is that 90.40 level. If we got down to just about 90.55, if we close below 90.40, that's going to be the sign that this first of all, you'll be out of the trade at break even, and if that happens. But if it does, then we're going to be looking at it. But we're very overbought in the euro, very oversold in the dollar index, so we're due for a rally. How much of a rally we're going to get if we get one, I don't know. So far, it's been 50 pips, which is nothing to sneeze about, but it's still very, very small. So we're watching that very closely. That's going to be key to what I think is happening in bonds. And, the bonds have been, in a very strong rally from 153 up here to, we've almost hit 160. And I believe if we get to 160 again, that's something to pay close attention to. If you look at the newsletter, you'll see that we focused on that because it looks like it could be a very, very interesting spot here in the Treasury bonds after we're almost into a 7-week rally now where we went from 153.05 to where today we hit 159.29 the other day, and we're 158.20 or 158.18 just a little while ago. So we're seeing if we can get up just a little bit higher from that level. So we're going to have John Person on next, folks, so stay with us. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're having a few technical difficulties here with the with getting John, but I wanted to spend some time here talking to you about the grain markets. Folks, I've been doing this for a long time, and this is only the second time that I've seen this type of a market. Well, actually the third. I saw the first one in the Russian grain robbery that ended in from 72 to 73. Then we had beans at $18 about 4 years ago. And now we have beans at almost $16. And, they are the stories that we're hearing. Last night, I had a farmer chat with me, and they have, the farmers, they rely on their local grain elevators to price the stuff. And they were paying to buy corn. They were paying 30 cents over the board. In other words, if July corn was selling for $6, the grain operator, because he couldn't get corn, was bidding $6.30 to buy 5,000 bushels of corn. Now, that is just when you start hearing stuff like that, that's in never land. I can remember my greatest trade I think that I've ever made. I'm sure it is hands down the greatest trade that I ever made is when I exited all the soybean positions in June of 1976. And right at the top of the market, and the news was so bullish, the Reuters said, I've said this many times on the air, the only soybeans that are going to be available are those that they'll show in the Smithsonian Institute. And that was the top that lasted for 2 years. So the weather is extremely bad everywhere. And it's really, just today, for example, soybean oil went from 58 to 60. That's two full points. And it has an average trading range regularly around 70 cents. So it went 3 times the average trading range today. That's how nervous the markets are. And corn is the same way. Wheat is the same way. There is problems out there, folks. There is no room for error. This might be one of those times where we're looking at something like a dust bowl. I don't know. This is a very, it's trading nicely. I mean, you're having 15 and 20 cent swings in beans. If you're looking at short-term patterns, they're there. You can certainly see them. But the thing that you have to worry about is that you've got to be able to protect yourself, because these things could literally, get in one of those situations where, they say, hey, there's just nothing out here. And then they try to buy it. And there's going to be a price that they're going to come in and sell it at. But you don't know where that is. And if you're short, you're in big trouble. So if you're going to trade this stuff, for God's sakes, be sure that you use a stop. Because if you don't, you're in big trouble. I mean, really serious trouble. Well, maybe not. Maybe you got lots of money, but I don't think anybody has that much money, because you don't know how high these things can go, because they have broken out into really areas that they haven't seen in quite a few years, and the news is backing them up. Of course, I'm a little reluctant to believe everything in the news, so I'm always watching these things for a potential of something turning, much like I'm looking at in the stock market. Now, the same cycles that we're looking at here with these lunar cycles with Mercury and stuff, they also affect the grain markets too. If you ever read any of Dr. Andrew Lowe's earlier books about the evolution of technical analysis, the first 54 pages of the book, he talks about the astrologers were the very first technicians, and he shows on these little pictures of the planets that are written on tablets by the Sumerians in 5,000-6,000 BC, and in other areas too. So they do work, but they don't work all the time. And that's the key here. It's not about how much money you make, it's about how much money you don't lose. And so be very, very careful of that. I think the easiest thing to do is if you're going to do something like that and you want to wait to see if you're going to have a top like this, and it'll most probably do it because this is how they usually do, you'll be able to see here that just look what Bitcoin did. You see the lower tops there? That took 3 days to make that. The next one took 3 days to make that. Look for those. Those are the ones that are easy. You're trading with the shorter term trend, and it's also giving you a pretty good chance for risk control with a very high profit probability. That's what I try to do here when I'm watching here. And remember, we've been watching Apple now for well over, oh my goodness, it's been well over 2 weeks here from the time it hit 133, and then it hit the 61% retracement at 134.04. He has not exceeded 136 as of yet. I don't know what the high was so far today, but if we exceed 136.5, that's telling you that Apple is breaking out to the upside. And we have earnings in Apples, and that's one of the stocks that reacts to very positive to news and stuff because they, it's basically a Academy Awards production for Apple. There's no negative dummies coming into that room, I can tell you that. So it's usually always positive, but remember that follow what the markets are telling you, not what the news is giving you. That's the main thing to pay very close attention to. Regarding the gold market, we've been looking at it very closely here. Part of what we watch very closely is the silver market. I'm going to cover silver first. And then, of course, it's had the high. What's it trading at now? I don't know if it's been much above the 135 level. My beeper never went off, so I don't think it's gone much above that if it has. This is the chart of silver. Now, this is a perfect ABCD pattern. You can see the AB leg is equal to the CD leg in both price and time within 1 day, stopping exactly at the 61% retracement of the high from February the 22nd. And that's also a 50% retracement from the high way back in on the 25th of January, up around that $30 per ounce level. So whether that's going to be a turning point, but we need to break out of that level. The breakout level in the gold would be at 1806. And of course, silver would be above the $27 per ounce level if in fact it does that. So that's really what we're keeping a very close eye on. Also, if you're trading in the oil market, pay close attention to, folks, because on this past weekend, on Friday, we got up to a 61% retracement on heating oil up at the 92.57 level. And so until heating oil can pop above 193, it looks like it should be in a downtrend. This has been a 5-week rally. Went right up to the 78% level, closed a nickel below it. So that's telling you that there's running into some signs here that it's going to be a very interesting move here if we can get above that 195 level in the heating oil. Now we're contra-seasonal now in heating oil because warm weather's coming in. Well, we think there's warm weather's coming in the east. It's pretty cold back there. Byron told me it was snowing in Connecticut in the mountains where he lives over the weekend, but still other parts are still pretty warm. But seasonally it should start getting warmer, and that usually is a bad sign for the heating oil. So that's one that we have our eye on, which also is related to the crude oil. Crude oil's got to get substantially above the $64 a barrel level to be a breakout. We're trading a little under 62 right now, so that's quite a ways from potential breakout. But the key, from my perspective this week, is to watch this lunar cycle that we have. The pink moon started on Sunday, the 25th. It goes all the way out till the 27th, 28th, 2 more days, and then it starts to wane. And then by then, if the market has made a top in that area, then that should be a significant top. Whether it's the top or not, I don't know. But in September the 3rd of 1929, we had a similar situation with a super full moon and a Mercury at perigee also, at perihelion. We're going to take a break here, folks. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, we're back, and I believe we have John Person in the room right now. John, are you there?
I am right here, Larry. How are you today?
I am good. John, this is on. I'm going to talk about Amazon here for the chart you sent, but when I first met you 25 years ago, you were doing some things with pivot points with the Dow Jones that was really quite popular. You still do that, don't you?
Well, that's partly what I sent with you with the person's pivot indicator, which is bestowed upon many platforms, TradeStation, Thinkorswim, person's pivots indicators there. Okay. And that's what we have up on that chart on Amazon, if your viewers see that. And what I'm expecting, so the answer is yes, pivots are still, and the person's pivot indicator is a very strong part of my work. Good.
Tell us what you're seeing here in Amazon.
Well, so besides, as you're probably quite familiar with, Larry, and know for sure, not one indicator is the Holy Grail. And I use several different type of indicators. First off, what person's pivots is based off price. It's a price-based indicator. It's projecting that this, and those are quarterly pivots, which Thinkorswim finally put person's quarterly pivot outlooks up. It is bestowing upon us a bullish outlook. The blue line represents the actual typical price based on the last time frame's valuations. So the market currently is trading above the pivot levels. That's positive. It's projecting for this quarter, which would be the financial quarter, April, May, June, an upside movement at approximately, 3,600 or so, 3,617 to be precise. What I see in the market is, these are option expiration pivots. The 3711 is the number. The market's holding above its pivot level. The next graph underneath it happens to be a tool by Joe Granville. I know you remember him.
Yes.
Called On Balance Volume. It trends the volume, and it is showing that there was a volume surge breakout. And if it's true that volume precedes price, this is a bullish implication. The gold line underneath is the seasonal trend on Amazon. Amazon has a tendency of rising and holding its value into late April, early May. Unfortunately, the other chart underneath that is a relative strength tool, and it's showing the relative strength of Amazon versus the S&P 500. And it has been weakening and showing a slight divergence. So my take of this is that we could see an upside with Amazon's earnings that's coming out Thursday. My guess is we should see an upside momentum to the maybe, targeting 3,700. It wouldn't surprise me in this environment. But after that, Larry, I think that would be the end all for Amazon for a little while, at least for the summertime. And so there might be a short-term upside play on Amazon, but I think there will be a better after-earnings play selling call spreads going forward throughout the June-July time period.
Wow. Okay. Now you've got another chart here of a company I've never heard of before, Kinder Morgan. And what's that about, John?
All right. Well, Kinder Morgan is actually it's in the energy utility space, and it too is energy has been one of the the red-headed stepchild segments of the market. The energy, obviously, XLE and the subsectors, which is oil producers, pipelines, et cetera, has underperformed vastly to the overall market. Kinder Morgan, as you can see, this goes back, I believe I sent you a weekly chart so that you could see where is it relative to before the debacle last year. And it's underperformed, and it's still not even back to where it was last February. We are in the height of energy demand season, despite a pandemic or not. It's summertime coming, and people want to get out. People bought C-Jets, people bought all-terrain vehicles, people bought second homes, third homes, vacation homes. People are going to go out. They bought Winnebagos. They bought boats. Sea Ray, parent company is Marine Max. The symbol was HCO. Look at Polaris, the stock symbol PII. All of that off the charts. We still need to put fuel in all of those types of vehicles. Kinder Morgan's a service sector industry, and if you look technically, Person's Pivot's projecting a higher target for this particular time period. The volume, if it's true that volume leads price, on-balance volume is suggesting there should be an upside surge. There's still, on that chart, you see seasonality, and the best part is this stock is outperforming relative to the S&P 500 in terms of percent change. So I'm a big fan. I think this is a good little trade that's got low risk, a good risk-reward ratio. You're risking 6 to 10% for maybe a 20 to 25% upside gain in Kinder Morgan between now and, say, July.
Wow, that's very good. John, I want to thank you for being on the show today, and I'd like to have you on in a couple of weeks so you could talk to us about the Dow Jones Industrial Average and show us some examples of your pivot point, because you made a name for yourself on the floor of the exchange back there using those, and I'd like the folks to see what you did back in those days. Would you be able to do
very
that?
Nice. Larry, you're the top dog in my books, and if there's anyone that you got to impress in this world that's seen it all, folks, it's Larry. And if
the trouble is, folks, that John's a cat lover. He's not a dog lover. Hey, how about having you on the 11th of May, Tuesday? Could we do that?
That'd be wonderful. We'll see if it's sell and May go away. As I famously said, no one ever said it's the 1st of May. All right?
That's for sure. Hey, listen, thank you very much, and give my regards to Mary.
I will, Larry. Thanks for having me as a guest. I appreciate it, sir. Be good.
Okay. John Person, folks, the best-looking guy on the Chicago Board of Trade. Okay, let's move on here to take a couple looks here. We've got some things that I want to share with you from our good friend, Mr. Z, John Chaney, just to show you what's going on in these grain markets, folks. He's been kind enough to, hold on one second here. I've got to, just a minute. I had the wrong... Where are you, JC? Here, hold on just a second. Oh, okay. Let me think. This is where we are. Just a second here. I've got these charts. What the heck did I do with them? Very frustrating when you see this. Boy, oh boy, I don't know what's... here we go. This is what we got here. I just want to show you some of the charts that John has sent us here today on the soybeans and corn and stuff. So just be incredibly careful there, folks. You can see, way back in 2012, we got to $18 in soybeans. We went from 18, dropped in half all the way down to 8, and now we're back above 15. We're at 15.50, actually taking out the highs of 2014. But this is not for the neophyte trader. trader. And just take a look here, folks, at this next one here, which is also the nearby soybean contract, and you can see it also breaking out. So there's going to be plenty. You can see a nice ABCD pattern there, and there'll be plenty of time to trade the other side of it. But right now, with this weather going on, you just don't want to mess with it. The weather markets are real difficult. I mean, I know how to do them, but look, you just don't know when they're going to turn. And you've got to allow yourself the amount of risk that you're going to take. It's got to be small. Let's take a break here. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. I wanted to remind you that we're going to have as our guest on Wednesday is going to be Stan Harley. On the Thursday, it's going to be Jeff Huge of Alpha Numerics. And then on Friday, might have a little cameo appearance by Norm Winsky if this top comes in. And, of course, if it doesn't come in, Norm must go into the history books along with Isaac Newton and a few others. David Paul will be our guest this coming Monday. And so, but he's very busy this week. Something came up for his show tomorrow, so he's going to come in on Monday, the 3rd of May, I believe. Okay, now I wanted to bring to your attention the U.S. dollar, folks, because the U.S. dollar is key to what we're looking at here. I posted a chart in here before. Anything below that 90-40 level is not very good for the U.S. dollar, and all you have to do is just look at the weekly chart on that, and you can see you can be looking at a U.S. dollar that could all the way down to easily 86 or 84. If you remember, back in 2000, and I think it was 2011, Tom O'Brien coined the word king dollar when it was trading at 72, and it went from 72 to 134, I believe, and here we are at where we are right now. So this is going to be real interesting. So watch that U.S. dollar. If the euro closes above the 120, 150 level, that would be telling you that U.S. dollar is breaking down. And that means the Fed is still throwing money at this, would be my guess, but because I don't know what they're doing. But we'll have Shane on. Maybe Shane will join us tomorrow and talk to us a little bit about the Fed juice. So we'll keep our close eyes on him and see if he'll be able to come on. So live every day in an attitude of gratitude, and may God bless. And be sure you do something for your neighbors, folks, because some of them still are hurting, even though they were supposed to get some of this money. Maybe they didn't, but we hear from friends that things are not as good as they appear.